Okay, we're recording this video Sunday 23rd of March 2014. Hope you're having a good weekend. We've actually got friends staying with us at the moment, so I'm a little bit distracted, but I thought I'd put out a video this weekend. Not the usual stuff. So normally on the weekend I'll do a global macro update because the commitment of traders numbers comes out on the Friday, and we can look at those on the weekend. Just to say, broadly speaking, I still stick with what I said last weekend. I know the FOMC kind of moved with the dollar index this week. For me, it was a little bit kind of confusing. But look at the charts at the end of the week, and I'm still broadly, directionally, I still kind of stand by what I said last week, I think. There's this question about the yen versus bonds kind of going on, but I still see, particularly with the short end on bonds being pretty weak on the 5-year and the 10-year. So anyway, that being said, I did get some good questions on Friday by email. I thought, what the hell, I'll run through some answer to those because they're fairly meaty questions. Kind of, you might be interested. They kind of touch on a range of different points, but this is it in a nutshell. They're about how to start E-mini trading. Second question is about understanding volume momentum and how the calculations kind of are made there. And then lastly, a little bit more detail on the flush signals that pop up on better momentum, which is kind of part of the volume momentum discussion. So that's what I'm going to talk about in this video. So you can kind of, if you're not interested in the first one, kind of hopefully kind of skip ahead to the second or the third or whatever. Well, let's start off with this first question from Leonard. Mr. Taylor, that's me. I am new at E-mini trading. How do I learn the basics? Stop loss, how to enter a trade, how to exit, how can I be sure my order was filled? Would I rely on my broker or NinjaTrader for getting these answers? I plan on placing only one contract at a time and not investing more than 2% of my account at any time. Also, what are the fees after I join your program? Thank you, Leonard. So let's deal with that really quickly. So first of all, to say I have done my best on the site Emini-Watch to put under this how-to guide section the very best of Emini-Watch. So go to the website, click on how-to guides, and here you've basically got a comprehensive list of all the best articles and videos on Emini-Watch, and they're arranged around this kind of number of topics. First of all, the basics. What are E-mini futures and what to trade? Because you've got different choices, for day trading vehicles, forex, crude, whatever. Charting software and programming languages, so recommendations on best charting platforms, and then how to learn how to program for those charting platforms. Discussion of the better trading indicators, and then how to trade with the better trading indicators, and then some specific setups and kind of examples to do with the better indicators. And then a lot of questions kind of come in about trading other markets, forex, crude, and so on, using the better indicators, or day trading, swing trading, and so on. So some recommendations on what to do there. And then what about trading longer term? And that's where I talk about things like commitment of traders, TRIN, trading index kind of data, and so on. Psychology of trading, running a trading business, and lastly, traveling and trading. So all of these articles, I don't know how many there are, there's got to be 60 or 70 kind of links to these, are all listed under these settings, all under these kind of headings. So as I say below, don't try and look at them all at once. There's hours of reading and fun watching here. So just take them at your leisure. You can always do a search on the page to find out for a particular topic that you're interested in. Just click on any of these, and this will take you to a feature article, feature video, kind of talking about this particular topic. Some of these include free code. So the links that have free code are kind of noted here, so you might be interested in those. And there we go, traveling and trading is the last one. So my first suggestion is, you're totally new to this game, that's a good place to start. Now, Leonard does have some fairly basic questions about, can I be sure my order was filled, and so on. I suppose the how-to guides on E-mini trading start a little level higher than that. So I would just do a Google search for any of those things that kind of nagging, kind of doubts in your mind about those things. So it's not the be-all and end-all in terms of guides to E-mini trading, but that's what I'm trying to do. I'm trying to get the best advice, all in one place. Obviously, there's a bias towards the better indicators. I don't know why you just use price indicators when you're given the average trade size and the volume as well, the volume of buying and selling. So, that's my bias is, use all the information that you get out of the data streams in order to day trade. Don't just rely on price, and so many other, methodologies and approaches and things you'll find on the internet will just be about price alone. I just think it's, you are handicapping yourself massively by only looking at one of the three pieces of information. So anyway, that's my little plug for the better indicators. So do you rely on your broker and NinjaTrader for getting these answers? You should definitely know your platform inside and out, and some of the platforms are extremely good at kind of support with how-to videos and forums. NinjaTrader is actually pretty damn good. TradeStation were behind on that, but they're trying desperately to catch up. They're putting out a whole bunch of videos on YouTube about how to use TradeStation, and also they've got a whole bunch of different market analysts recording in their TradeStation setups and putting all those things on YouTube. So just do a search on YouTube for other kind of how-to videos. Your broker at the end of the day is there to make money from you, so your broker will encourage you to start trading as soon as possible, getting him his commission. Do not do that. If you are damn new to this, do not start trading straight away. We have this great thing called simulators or paper trading, which is, set yourself up, get yourself a platform, get yourself some data, have a look at the charts, and just watch, literally for weeks and months. Start taking trades in your own head, write them down as paper trades, use a simulator that are built into some of the trading platforms. Spend all of your time doing that. You don't have to risk $1 of your money trading until you are totally comfortable with what you are doing. So that would be my number one suggestion, is do not trade until you have spent weeks and months paper trading or simulated trading. So Leonard, there we go. Hopefully that's kind of helpful to you. That's the first question. Second question, to do with volume momentum. This was an interesting one. This is from Madhu. So let me just read this one to you. Hi Barry. Even after a month of becoming a member, I am still awestruck with the quality and amount of information in your website and the consistency of your indicators. Your style of explaining the possible dynamics behind the price movement, simply amazing, makes perfect sense. Well, that's extremely kind. Thank you very much indeed. The only concept I have trouble understanding is the volume momentum. I believe that the volume of buy and sell is always the same, i.e. the same number of buyers and sellers at any point in time. It's only the conviction of buyers and sellers that moves the price. By your indicator shows different numbers, volume up and volume down for each bar. How is that possible? So let me just continue. I also don't understand the momentum value of each bar. The calculation of that may be proprietary and may not be able to reveal it, but I would appreciate a video at some point explaining the construction of those values. I'm a physician and psychiatrist by profession. I'm fascinated by economics a few years ago, and recently by the power of technical indicators in analyzing and predicting human mass behavior. It's interesting, actually, the vast majority of what I know about the subscribers to Emini-Watch is they're all professionals. You're either doctors, dentists, psychologists, physicians, engineers, huge number of engineers, people with quantitative type backgrounds. They're just kind of drawn to particularly the technical aspect of trading, which is kind of interesting. The technical analysis, more of a systematic approach, more than a kind of fundamental kind of approach. It's kind of interesting. So no, can't reveal any details about the actual specifics of how the momentum indicator is calculated. But let me tell you this: you kind of hit the nail on the head, Madhu, here with the volume of buys and sells is always the same, but the conviction of the buyers and sellers that moves up the price, and that's the point. Whether the trade happened on an uptick or a downtick kind of measures demand and supply. Now, there'll be people out there that say that's way too simplistic an approach, but if you have, when you look at time and sales and you see the trade going through, did the trade happen on an uptick? So was someone anxious to buy and therefore they push the price up, in the case of E-mini, by a quarter point in order to buy, get into the market, or did they push it down by a quarter point or a tick down in order to sell and get out? It's that conviction either way that determines the buying and selling, whether it was being bought or whether it was being sold. Agreed, the volume that went through is identical. The buyers and sellers kind of match, but it's conviction of the buying and selling, and that determines kind of demand and supply, who is anxious to buy and who is anxious to sell. And when you look at better momentum, you can actually see all of this in real time, because it actually makes perfect sense, where you have kind of exhaustion buying and then start changes. People start aggressively buying, and the upticks start coming in, and it starts driving the momentum up and so on. So that's just a point on the construction of better momentum. And then we're going to refer to better momentum in a little bit of detail here, because I've got a question from Chuck specifically about flush signals. So, hi Barry, I bought the Better Indicators package a few years ago. I notice sometimes a flush yellow signal will occur on a retrace. Is there any special meaning to this, like probability of completed correction and turn? An example came on your video Friday 21st of March, yellow flush signals on the 5th and 19th of March, 40,500 tick chart of the ES. So I'll show you that in a second. P.S. I use the indicators to trade live capital and lean hog futures. Don't have any empirical data, but it seems like the better sine wave became extremely accurate and was in sync with the market when lean hogs broke out, began a run to history highs. So let's go to the charts now. So we're going to talk about, first of all, I'll show you lean hogs. So one of the things I hate about having bought in years gone by literally dozens of different kind of trading indicators and packages and so on. Any kind of fixed values or optimization I just despise, because they're so corrupting to the way you can fine-tune indicators for particular markets and so on. There's nothing built into the better indicators. They're all adaptive, so you just plug them on. Whatever you're using on a 500 tip bar chart will work theoretically on a monthly chart of lean hogs or whatever. Let's look at lean hogs, just daily, weekly, and monthly. And I have this little chart set up, just setting, I call it equities, monthly, weekly, daily, because sometimes my default chart actually on here is Apple, APL, just sat there because I like seeing what kind of Apple's up to. But I can just plug in, you just go format, and you can just plug any particular, this is TradeStation, so any particular values in here. And I've linked all the charts together. That's what this little signal means. The symbols are linked between the three, and it just kind of ripples through. So we can pull up a picture of lean hogs. This is lean hogs using this .p, which is pit traded, just because back in the old history in TradeStation is only pit traded, and if you just put in @EH, the monthly chart doesn't show you kind of great back history. But that's the only reason you could use @LH without the P. Works perfectly well on the daily and the weekly chart here. But monthly, weekly, daily, weekly, monthly, which is three kind of typical kind of setups with a multiple of 3 or so between the different time frames. Look at the medium time frame for trend, and you can see what happened with hogs. So what we're looking for is exhaustion patterns on the downside to mark the bottom of the market. And we have this first one here, exhaustion sell, bullish divergence, blue professional bars down here kind of come in. We test a little bit more, have another exhaustion sell signal, bullish divergence comes in, and flush patterns. This bullish divergence close to the zero line, so always say wait for the flush patterns to come in after you see that, and that's flushes coming in there. We'll discuss flush in a second. That's kind of flushing out everybody, the sellers at 80. And then we have an initial, this is short covering rally, when you see an exhaustion buy after exhaustion sell like here, when we've kind of bottomed. This is not, it's not happening on a left shoulder kind of way up as we're making new highs or anything like that. This is just happening at the top of the channel, and it just shows, people's stops, trailing stops getting hit, and the exhaustion volume kind of being made there as we're running those stops and covering the shorts. So we kind of come back to test, and then here, beautiful. Blue professional down bar into that zone where we had all those exhaustion sell signals kind of coming in. It's kind of quite extreme selling. It's not as big as an exhaustion pattern, but quite a lot of selling kind of going on there, and support holds. And then we initially kind of rush away. This is the interesting signal here on the weekly chart. We have a blue professional down bar and then break into an uptrend. So we know the professionals are buying at that point because the lows hold and the highs get taken out. And it's happened kind of mid-sequence. This hasn't, gone to a resistance to support kind of move in here. It's just held down there a little bit and broken into an uptrend. So that's a good little pattern. And all that we've done with Rambo patterns, the amateurs got a little bit too excited. They're kind of buying this new breakout. Remember, a Rambo pattern is a potential reversal of an amateur breakout. The amateurs are driving this breakout to new highs here, and they're a little bit too excited, and we kind of come back. By the time they're kind of, now they're anxious, they bought the breakout, and they're sitting on losses when we have this retrace, and this is them exiting on the other side thinking, oh, I've got this wrong, we're still going down. And so you've got little amateur down bars here, little one there. That shows a lack of selling. The amateurs maybe who are scared out of their positions there, being active at the other side of that channel, but it's right where the blue professional bar kind of came in here, around that kind of zone. That blue professional bar's zone of acquisition holds. We have cyclical support kind of comes in, and then we race away. And those little blue professional bars getting this move going, that's jumping the creek, that one there, getting us through this previous high, kind of getting us going on the weekly chart. So on the weekly chart, you can see all those kind of volume patterns kind of going on. On a daily chart, you can zero in a little bit. This bottom was made beautifully with a pullback to end of trend. We have exhaustion, selling, bullish divergence, and flush here, flushing out the last of the sellers. We get little Rambo patterns down here at the bottom, pullback to end of trend. Nice little sequence kind of bottoming us there. And then we just we're playing with this kind of zone, finding out where the areas of support are, and then finally this last one. We didn't go pull back to end of trend. That didn't kind of make it out. The selling was really weak. We broke into an uptrend here above resistance, bang, and this is blue professional bars through 100, kind of getting us going there. So you can use same types of settings for swing trading stocks, swing trading futures, and so on. You just have to be more patient with the swing trading setups. But there we go. So that's just Chuck's comment on lean hogs and how the better indicators kind of showed that little breakout into the last move. But the question is about the flush patterns, so let me just go into that in a little bit of detail. So typical kind of flush pattern looks like this. So 500 tip bar chart, this is Friday's trade where we made a high up in the 75, 76 kind of area. That was the high for the day, and we kind of fell off. So a typical type of pattern is this. We breaking out kind of new highs here, blue professional bars kind of come in, and an exhaustion pattern. That's the first place that the professionals have got resting sell orders, so they're taking profits kind of there. Little bearish divergence kind of comes in, Rambo patterns showing the amateurs are buying the breakout, so it's kind of suspect, and we come back a little bit. Always wait for price confirmation. We're looking for everything to come together. We need to see professionals at the top of the market. We need to see amateurs being wrong-footed. We need to see exhaustion patterns and bearish divergence, so the momentum kind of rolls over to go the other way, and we need to see price confirmation with a nice little pullback to end of trend here. So on the 500 tip bar chart, we've got exhaustion, bearish divergence. The flush patterns then start to signal. Flush patterns, I always think about flushing out the last of the buyers or the sellers. So this is flushing out the last of the buyers here. The signal here on better momentum is it's a pretty high reading in terms of buying, but it's not as much as the exhaustion buy that we had here, and therefore it's people anxious to kind of buy the breakout, but they might be wrong because it's happening after we've had exhaustion, and the exhaustion patterns are where we see professionals being active. We then come in at the end of trend and make even more exhaustion patterns. So more exhaustion buying kind of going on here. The bearish divergence comes in, and then there's a flush pattern here. So this one's happening after the end of trend, and that's flushing out the last of the buyers. So they were anxious to buy here, but it didn't kind of reach an exhaustion pattern, but it was fairly decent buying, so it's exhausting those buying. So it's a kind of a divergence pattern in as much as it's happening after bearish divergence, and it's showing less buying than at the extreme, and sometimes we're making kind of new price highs at that point. So it's a type of a bearish kind of pattern going on. So that's kind of a more typical. It's not a picture perfect kind of rollover at that point, but you get the point. It's an extreme amount of buying or selling. It's not as much as exhaustion, and it's happening after exhaustion. So it's showing some kind of flushing out of those last buyers in an uptrend or sellers in a downtrend. 1500 tip bar chart, the bottom of that we had on Friday, although it's at the end of the day, but the same type of thing you can see here. Here's the exhaustion sell kind of going on here. The bullish divergence kind of comes in, and then the flush patterns start to show at those lows, breaking to new lows. We've still got people kind of selling it, and they're kind of flushing out the last of those sellers at that point. The highs up here, again, that kind of rollover that we had during Friday, you can see here this flushing out those buyers at that point, and then exhaustion, bearish divergence kind of comes in and so on. So you got a bunch of flushing patterns kind of coming in, flushing out buyers and sellers. Now, let's talk about the 40,500 tip bar chart, and let's show you that. So these flushing out patterns are on the downside, so they're happening here as we're making new highs. And really the flushing patterns should be happening after exhaustion to show exhaustion buy. Here they're showing kind of flushing out selling patterns because we had exhaustion sell. And when you see them like this, on that 500 tip bar chart or the 1500 tip bar chart, at the highs and the lows, when you see them happening at the highs and lows, that's confirmation of a bottom or a top being made. But when you see the market kind of making new highs and you've still got flush patterns kind of going out here, as we're going up making this uptrend, that is flushing out sellers as we're making the uptrend until we make the exhaustion pattern up here, and then another exhaustion pattern on Friday. So they're flushing out patterns until we make exhaustion. And the way I interpret it is that is people anxious to sell as they think, the high's in, let's sell it. The high's in, let's sell it. And we're flushing out all of those sellers that have to reverse. They've kind of gone short a little bit too early before the exhaustion pattern, and therefore they're going to be flushed out of the market because we're going to break to new highs. They're going to have to cover and so on, and that gives more energy to the market continuing to break up. So they're still valid. It's not in terms of a correction pattern. They're just showing that they're people anxious to get short too early into this because we need to see that exhaustion pattern at a high before this thing's kind of all over. So that's the way I interpret those flush patterns as we're kind of going up through making that signal. On the downside here, so this is the rally that we had Wednesday after FOMC into Thursday and Friday. So we had this initial kind of exhaustion sell, and I was expecting to see another exhaustion pattern, kind of way further down as this really trend move kind of broke down and got into play properly. But what we had at FOMC was a couple of flush patterns here. And so then the pattern becomes, we've got exhaustion and bullish divergence kind of come in. This is flushing out sellers, and because we start to rally from there, those are people kind of anxious, as I was on, thinking that this was continued breaking through 1840s to new lows. It's kind of flushing out sellers, so they've got kind of too short too early, and now we've made exhaustion patterns on Friday. We can then put in flushing patterns on the way up. So I don't know, that's a little bit kind of esoteric maybe for people, kind of explain how I interpret kind of flush patterns. I could optimize the code in order to make these just happen at lows or highs, but I actually think they're kind of pretty useful as we're kind of continuing through trends, because they're flushing out sellers that help propel the market to new highs, because these people have gone short and they'll need to cover as the rally kind of continues. So that's why they're kind of there, and that's what that's how I interpret the kind of positioning. So there we go, Chuck. Hopefully that helps you, and hopefully that helps Madhu and Leonard on those questions. If that kind of video was interesting to you, I'm not sure how long this has run in terms of time, but if that video is interesting to you, kind of just with a random set of kind of questions, kind of easy to hard type stuff, I'll do more of those. So if you like it, let me know. Hope your trading's going well.